President Joe Biden has said that he absolutely supports a financial transaction tax. Here's what you need to know. An FTT is a transactional tax on the buying and selling of securities. It is not a tax on the profit made. No, there's already a tax for that. But on the gross transaction itself, it is not a new or novel idea. 16 countries have implemented an FTT, including Miss US of A herself. We had a 20 basis point transactional tax from 1914 to 1966, where during that time, if you made a trade worth $100,000, it could have cost $200 in taxes. Now, lately, Democrats, including the Vice President Kamala Harris herself, have issued several proposals that include some form of an FTT, most ranging between 10 bips and 50 bips. Now, those who support the financial transaction tax do believe that it is a small price to pay for the long-term investor, that it can curb unnecessary short-term trading, reduce market volatility, and raise hundreds of billions of dollars in revenue. Those who are opposed to it, including studies released by the Modern Market Initiative and Rutgers University, found the opposite. They found that it increased capital costs for enterprises, lowered stock prices, increased costs to the average investor, which reduced returns for the average investor, and actually increased volatility in the stock market. From an investor standpoint, what could we expect? Well, for starters, I think we could all say goodbye to zero-cost trading. Also, we can expect the internal expense ratios in the mutual funds and ETFs that so many average investors invest in to increase. Morningstar estimates that a 50 basis point transactional tax would actually increase the internal expense ratio of an actively managed fund by 30%. Now, this may seem like a tax on the wealthy, but let me remind you that 54% of Americans are invested in the stock market in some way, whether through their 401k, IRA, 529, ABLE account, or maybe you're a part of a pension that is managed by your employer. Or maybe you're a farmer who buys futures to hedge against market risk, or a municipality that raises revenue by issuing bonds. A financial transaction tax can have very far-reaching implications. According to the International Monetary Fund, of a snapshot of 11 countries that had instituted an FTT since 1990, 10 of them had repealed it, our lone survivor being Hong Kong. Now, of the 10 that repealed the tax, most said it was because it didn't perform like they expected it to, and it did not reach revenue projections at all. Take the case of Sweden, which actually experienced a decrease in tax revenue after they implemented a transactional tax. That's it for this week. This is Jeannie Fisher, the 401k Lady.